Yo, really quick, just want to show you my trades this morning. My trade this morning, just one trade. Um, and right now, all I want to show you is silver. It was right about 8 o'clock in the morning. I don't really know which time it was, but obviously it's coming off of a great supply zone. On the weekly chart, this is a leg in. It's hard to see because it's scrunched, but essentially we have leg in, comes down, down, and then down. This is a drop based drop, um, and it's actually really good in my opinion because it forms free space above it, which means that if it were to break this line, probably going upwards, it's a sign of bullish, and then this is a good spot to short, and that's what's happened. And at the time, remember it was like right here. It was like right around here. Current price was. So it's just starting to show that yes, there were sellers there pushing it around. And on the daily, I saw that I double checked that in this green bar that there's nothing here that it has to form itself something, and it is indeed coming from a good supply zone. This downtrend in lonely green bar and then pivots downwards, which is a good spot for a supply zone. 240 minute, I go down one level and I immediately look at on this green bar, where can we find buyers? Where is there a separation? On the technical analysis aspect, where is there separation? Here's a separation. Here's no separation. Here's a separation right here. And would be my target because I'm going downwards on the weekly trend. I'm shorting. Technically, I want to short from this level, but I'm not going to take this giant zone. So we take different increments all the way downwards. But essentially, this is where I'd want to get out on the weekly zone. Okay, and then if it breaks down this way, if it breaks these, if it breaks these, I'm probably gonna go downwards because there's free space below and there's a place to go below it as well. But for right now, I look on the 240-minute chart and I look, okay, well, there's free space identified, and then we have a holding level, and this 240-minute bar is going downwards. And at the time, it was near this dotted line, and it's like, okay, it's giant bar, it's overextended bar, which means, like on average true range scale, that this red bar currently is bigger than it should be. So when it comes to overextended and in a demand zone, um, what are the chances of it breaking the demand zone and being even more overextended as a 240-minute bar? Very small, very small. So I was like immediately looking for longs. Okay, we need to get in long because I think the bar is going to get squished up. Um, Additionally, why I think it's going to go up from this area. Obviously, it's the 240-minute demand zone, right? The holding level, and then the scrunchingness of the 240-minute is just too overextended, and the odds of it breaking that are very slim because it's already gone so far. Now, the 60-minute, I noticed that the 240-minute pivot is correct. There's free space, and then that was the last bar that was hit. That was the last pivot. So that this is a concrete. This is not moving. The stop. But I did notice that there is a demand zone underneath it right here. Right here is a demand zone on the 60-minute. But the main priority is the 240-minute picture, and that 240-minute picture shows nothing on the 60-minute. That zone was around here, and it shows nothing there. So this takes precedence over that 60-minute zone. So that's why I remain having the stop at this black line. Now, I'm not taking this zone like a normal demand zone you'd take, right? I'm not taking this. In fact, my risk is so much smaller than this. So this is the zone I think it's gonna go up from. But right now I see that, so it was going down, and I bought inside of this 60-minute bar. Okay, and I saw that, okay, it's going down, it's overextended, sure, on the 240-minute, but the 60 minutes looking very bearish. And then I noticed that if we were to retrace, where's the nearest possible out for me? I would want to get out before this line. Okay, and that's just because this 60-minute split is a big split, yes, indeed, but the sellers will be starting from the top of this bear fib, or from the bottom of this bear fib, all the way to the top of this uh, candle. Okay, so this is basically the picture. This is these are sellers in here. All in here are sellers, and so I would want to get out. I'm only capturing free space. I'm only capturing where no sellers are. Okay, if I'm long. So now I noticed that, but then on the 15 minute, let me give you an example. Um, with an uptrend, I noticed that the pivots downwards for forming retracements are high volume candles. So this is the highest volume out of its peers. This one was the highest volume of its peers. This pivot is very high volume compared to what's around it. This one was a retracement, and this one was a very high volume. This one, very high volume, very high volume, and it formed a pivot, right? So this is in an uptrend. Now that hit this weekly level, it is going to form its first real pivot. Actually, it formed a couple pivots here, but it's a downtrend now, in my opinion, because it hit this weekly level. We are looking for shorts, okay? Um, on the higher time frame, we're looking for shorts. On the lower time frame, it's overextended. But the 15 minute, since it's an uptrend, I'm looking for high volume pivots going downwards. If it's a downtrend, I'm looking for high volume pivots that are going upwards. In this 15-minute bar, although it wasn't this high, it was around like right here, and I was inside this 15-minute bar, right? This bar, I was inside this, and it was down here, or down here probably, and I saw the volume way higher than all the rest already. Hello. And the volume was way higher than all the rest, and I'm like, okay, this is forming a pivot. This is in a demand zone. It needs to retrace on the 240 minute because it's way too big of a bar. And it also on the 15 minute solid red, and it's already forming a pivot, and it's the highest volume. If it's going to be a pivot, it's going to be the highest volume candle. Then boom, it is a pivot. It's a qualified pivot. And now look at these retracements. They don't go crazy long, These pivots don't work wonders. They work a little bit. And they're anti-trend, and that's what this is. This is anti-trend pivot. Now, how did I get into the market? I got in on this bar. I got in this bar, and I saw that this 15 minute it goes into a demand zone, and it shows a pivot, and it's high volume. And on the 5 minute, I was like, oh, this second bar formed, and then it formed up and then down, and then this bar right here goes down, hits this open right here, and it comes upwards, I'm not in the market until it hits it breaks the high of this the second bar here. Remember, this is the bear fib, this is the bear bar, this is the second bar, and then this is the my entry bar right here. And it breaks this. I'm like, "Oh, this is going upwards." Okay, remember all you see is like, oh my gosh, it's terrible looking, but all you see is like this. And then this current bar, this green bar, is like just breaking this high. That's when I entered. Okay, and so I put my entry right here, and then I put my stop below here. That's what my stop would be, because this picture would break if this pivot did not work. So I didn't enter how most people would enter right here on that open if they really think it's going to go upwards. I entered as a confirmation. It's going downwards and it breaks the high, which means on the 5 minute there's nothing stopping it here. On the 3 minute there's nothing stopping it here. So that's when I entered the market. I entered right here on this bar, and then my target was, um, because I just want to capture just a small portion. I saw this demand zone. I'm like, okay, I want to get out before there. Okay, it's an up and under. I see that. I ideally, I noticed that the nearest supply in this regard is, because I'm buying at this green line. The nearest supply is like here is the nearest supply. Yeah, which we did mark. On the 15 minute, it's the nearest supply. On the 5 minute, it's the nearest supply because this is a broken demand, which makes it a supply, which obviously worked. Okay. But on the 60 minute all the way up, that's the point, that's the start of supply. So I want to get out before then, but so I just got out, just capturing the smallest itty bitty little bit of profit. Um, and I'm comfortable with that. I'm totally fine with that, even though we missed out a lot on profit because this is where we should really get out. Probably we should get out around here, just a little bit before where we actually want to go. But it's extreme for me, man. I'm just trying to capture a little bit. So this is what I did. This is my target. So in this trade, if I want to cancel everything else, just look at my entry and exit. Okay, this is what happened. Entered on this 15-minute bar, showing a pivot. I'm inside of this bar. It goes upwards. It goes upwards, um, and I get out immediately, almost on this 5 minute bar. Yeah, on the second 5 minute bar. So this goes. I initially usually want to get out on the first move, which is this bar right here, the entry bar. It should get me out. I want to get out, but it was forming another one and it was breaking this high. And I'm like, all right, I'm not getting out for sure, not until it hits this blue line. And I figured that it was gonna go even more. So, but I got out at the blue line. I entered in the green line. My stop is on the red line. I did times three contracts and we got $550 on this little tiny trade that was less than a minute. But really, if this was 550 bucks, and what if something happened and for some reason I don't know how it would want to, but what if it goes down? I don't know why it would go down. Oops. How many of these? One, let's say two of my risk, so it would be $1,010 risk for $550 reward. But it's high, dude. Come on, this is going up. This is very high probability because of all these issues. This alone, this picture alone, yields high probability. It's going up. The bar already did the risky part. It went to the open, almost downwards, but it went to the open, crushed upwards, breaking this high. There's nothing stopping it. I'm long. This alone, this picture alone will yield profits. Now, if I combine with the 240 minute, I see that it's overextended too much, and we want to long at this demand zone. If anywhere, if anything's going to turn this bearish bar a little bit, it's going to be this demand zone. Okay, and that's what happened. And then we knew that it was a downtrend because the start of this weekly level right here, this weekly level was working. So that's how we knew it was the start of the downtrend. Looking for a downtrend, and we saw that this high volume bar actually formed a pivot, and that's exactly what we wanted. And we're right here, and we're like, this thing is going to be the pivot, man. It's in the demand zone. This thing is going to be the pivot on the 5 minute. It shows green. I'm long. I'm long and put my stop here. I'm happy with it. I'm capturing just the smallest amount, and that's what I did. Captured this to this. But yet, small as you say, it's $550 in my pocket for one day, 1 minute, basically. So that is this trade overview. Thank you for watching.